Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of September 30th, 2024. We're going to talk about where we are in the market and the S&P 500 year to date, the different sectors, how they've performed, the economic data that we have coming out this week, as well as interest rates, and then we're going to jump into the live trades on the option trading platform. Before we get started, if you appreciate the time and effort that goes into making these videos, please hit the like and subscribe button down below. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. And if you want to dig in to the options a little bit deeper and take advantage of the leverage as well as the safety, go ahead and check out the paid course. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and free stocks. You also get the free charting software that's great, and I use it every day. It's a zero commission online trading brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's take a look at where we are in the market. So this is the 5-day chart. So you can see we were up slightly last week. We started the week at 57.02 and we ended up at 57.38. So up about a 0.5% last week. And year to date, we are still up pretty big. We're up 20% year to date. We started the year at 47.43. And the PE ratio now in the S&P is 21, so a little bit overvalued since the 10-year average is about 18. And if we look at the 5-day sector tracker on sectorspiders.com, you can check this out. It's absolutely free. You can look at the week last week, and you can see energy was down, healthcare was down, but then we had materials up, so gold, silver. Energy was down 1.77. So you'll see I'm actually invested in energy, and then consumer discretionary was up pretty big. And then year to date, we've got everything up with utilities leading the way, communication services, financials. Where's technology? 16. Yeah, still everything's up pretty well. Let's go ahead and look at the let's look at the news for what we've coming up this week. We've got looks like on Thursday we've got some jobless claims, and last time we had 218,000, so that'll be interesting to see how the employment is going. And then we've got the U.S. unemployment rate 4.2%. We'll see if that comes out as employment is strong or weakening. And then we had last week, we didn't have too much. We had GDP come out and it was 3% as expected. And then we had PCE 2.7% as expected. And then core PCE actually came in lower, 0.1. So that's why the market was up. Good news, or part of it, on Friday. And then if we look at the fear and greed index, people are getting a little greedy, 68 right now. So, I want to be less invested long when the fear and greed index is up this high. When there's extreme fear, that's when I want to be all in long, looking for the market to go up. So that's something that is against the human nature, and something that we like to do as traders. Interest rates. So the Fed did cut a 0.5 point this month, and so we're at 5 3/4 to 4.5. Right. Let me start that. We're at 4 3/4 to 5 right now. So we're looking at, for November, a 46% chance of a 1/4 point cut and a 53% chance, so a little bit better chance of another 0.5 point cut in November. And then, as we've covered before, going forward, we've got rate cuts coming all the way into next year. And look, we're going to be down at 3 to 3 1/4 in the middle of next year, and the end of next year, a little bit below that, 2 3/4 to 3. But really, the middle of next year is when we're going to be way down there. Let's go to the FactSet earnings insight, and we can see the earnings growth 4.6% for Q3, And then there's that PE ratio, 12-month PE of 21. And then if we look at the numbers coming out next year and calendar year 2025, we're looking at earnings growth of 15% and 5.9. So really good for next year. For Q4, we're looking at 14.9% earnings growth and revenue growth of 5.3%. So everything's looking pretty good going forward. So let's jump into the trades on the platform. Uh, I told you that I've got some oil on, so I'm surprised. If you look at the chart on crude oil, look at this. It's way down. I don't really like to trade crude oil. I haven't had a lot of luck with the crude oil and futures, but when it gets down this low, below 70, I want to be long because I don't think it's going to go much lower. And when we get up to 100, I'll probably be short. But anytime we get down below 70, I like to go long oil, especially before the election. We're going to start pumping oil again if depending on who gets in. And I'm not going to talk politics, but if we become energy independent, that affects the oil prices as well. But I basically just go on pricing. And when it gets down this low, I've got a 68.67 put credit spread on. So we collected, you can see I've got two of them, and we collected just here you can see I collected 300, and then I collected another 310. So $610, and we're down 219 right now because oil dropped last week. But it's down. We're still above 68, so I'm still in the profit zone right now. If we go to the curve mode and analysis, you can see right here we're still going to end up $610 P&L at expiration, and that's in the next 18 days. I just don't want it to go down further. But then I'm up $610. So I'm down 219 right now. So that's really that's going to go away. I'll be up 610. That's why it's got external 829 right here, because it's taken into account the 219. So this is what I have left to make as long as we stay above that 68. And we're profitable down below that, down to 67.7 because of the 610 that we collected. So that's oil. And then AMD 150 to 175. I'm still in October. This is generally the week that I'm going to start to look as soon as we get more in the profit range. We've got 322 left in extrinsic here on AMD, but then I'm going to look to close this out and roll to November if I'm going to stay in it. But Ivy rank 42. We've got earnings coming up in AMD on 1029. I'm long AMD. I love AMD and long, and you can see there's support down here, but we're profitable. You can see in this range down to 150 to 175. We're right in the middle, so we're looking good, and we're looking to collect that $322 in the next 19 days. So as long as we stay in there, I'll let it ride. But if we get close and start testing, either on the downside or the upside, then I'll look to roll and collect more premium in November. My target for AMD is up around $200. So it's much higher than where it's at right now. But there was a move up at one point last week, and that's when I put on the 175, 185 and collected more premium going forward. But you can see we've got 322 in extrinsic there. Avago, Broadcom, same situation. Iron Condor, 160 to 182. We are in that right in the middle of the profit range, and we've got 294 in extrinsic left to collect in Broadcom, and we just need to stay in between that range. And you can see we've had a big move up. This is the yearly chart and daily, so you can see the trend up. But Broadcom, AI stock, semiconductor, I've got quite a few semiconductors, which should do well as interest rates are cut, as long as we don't hit that recession. And generally, when we start the Fed loosening and economic easing cycle, their a lot of the time there's a recession that follows. So we've got to be careful about that and watch the debt and the employment rates and see what happens. But regardless, either way, we should do fine with this portfolio. And again, this is not my retirement portfolio. This is my option trading portfolio. So I'm looking for high IV rank and selling options in order to collect that premium. And then I do leaps options if I buy because they're longer term and then we don't get that time decay. Coin is the next one. I'm long coin. It's been moving up. It's at 191. Actually, it dropped down and then is moving up again. But I want it. I've been trading both sides of it, but coin has been doing pretty well for us, and I'm long coin. I think it's going to keep going. I'm a Bitcoin fan and crypto fan, so I hope it keeps going. But we've got 290 in extrinsic here. We just need to stay above the short strike, and you can see all the profit range and 311 and P&L left, so 290. DraftKings, we've been doing leaps and covered calls against, or leaps and poor man's covered calls against it, and we've done really well in DraftKings over the last year, $3,500 in profit. So it's been doing really well, and we are long, or we've got a deep in the money call 30. We're at 40 right now, and we've sold a 42 call against it. So our call is up in this range. Then we've got ELF, so a health and beauty stock. And this one I've got a Iron Condor 110, 115. We're right in between that range, and we've got quite a bit, 558 in extrinsic. Left. We're up 24 right now. So ELF is doing well, and I like ELF going forward. I'm long ELF. It's way undervalued. I don't know why Tasty Trade took off. They had an analyst rating and targets, and I've emailed them and asking them about that. But the financials, I mean, everything in ELF is fundamentals are extremely strong. So I like ELF, and the fact that it's down. Look at this, way down. So I'm looking for it to move up. I don't know why it wouldn't. So long ELF, my target's 200. It's at 112 right now. So much higher than where it's at today. Gold, I've been trading both sides. I've got October and November on. Iron Condors, right in the middle. We're in that range. I want to stay in that range, but we are at highs. So I'm looking to stay in between this range. With gold, but high IVR 75. So that's why I've got these trades on. That's when you can collect the most premium when the IVR is high like this. And look, we can collect $440 with these trades that we've got on, as long as we stay in that range. And again, we're right in the middle of that range. L3, great defense stock. Iron Condor between 230, 240. Again, we're right in the middle of that range. L3's done really well for us, trading that over the past year as well. Yeah, $1,774 just trading L3. But I like L3. It's been trending up, and I just wanted to stand between that range right now. 46 IVR, so good premium. Micron had a big jump up last week. I had a call on that kind of hurt. I mean, I still did fine, but I should have, it would have been great if I didn't have the call on, and I just had my leaps option. But we've done well in Micron and made good money in it. What do we got? What last? It actually shows that we didn't because of the options, but Micron's done really well for us, and I like Micron. We are at 107 right now, and you can see that big jump up that it had after earnings. It had beat and had good news coming out, so I think Micron can go much higher. Great AI stock moving forward, and I'm long Micron. But I did, after the move up, that's when I put on this call spread, um, and last week, and added the call side as well, so that we make money on both sides. The fact that it did have a big move up, so I'm betting that it's not going to just continue to skyrocket up because of this move. So I wanted to stay in this range and then collect that $300 in premium. So I look to collect on an iron condor like this that's $10 wide, about a third the width of the strike, and that would be $333, but we're at that $300 range. So Micron, we're looking to stay in that range. Service now, it had such a parabolic big move up that I put on the call side. So I do trade both sides. And with this big move up, I was looking for it to come down, and look what it did. It came down because stocks move up and down. So when they move straight up, they're not always going to keep going straight up. But if you put on a call credit spread, you sell a call credit spread and bet that the stock's going to go down. That's what I've done in Service now. And so far, 67 bucks since I put this on just about a week ago, and we've got another 125 left to make in Service now. I like the stock much higher, but I just don't like it that fast in the short term. It's at 881. My target for Service now is like 1,000, but because of that parabolic move up, that's why I'm put the other side on. And I don't want to have just be completely long in all my plays either. So I want to always have, should the market drop for whatever reason, I want to be able to make money on both sides as well. NVIDIA, Iron Condor 120, 110 put credit spread, and 130, 140, and we're right in the middle of that again. So we've got a lot of Iron Condors on right now just because it is at highs, the market, and IV rank is high. So I don't want to just be long at this point when, remember that fear and greed index, everybody's greedy right now. So I should be actually more short in my mind. So, but I am still a little bit long. Oxy, big Buffett stock. I've got a leaps option long. Super Micro, I put that on last week, looking to collect, or I sold a put spread 430, 420, and it actually, oh no, I rolled from October to November and collected premium, but we needed to move up a little in order to profit up above, the about 425 because of the premium we collected in order to be profitable. We're at 419 right now. The target for Super Micro, it's been killed. There's some accounting news that came out. They cut their sales force. A lot of bad news, but this stock could double in a year, and it's been known to do that. So I'm long Super Micro. Their numbers with the AI and the build up out of these data centers, they provide a lot of the systems that have better cooling than the competition. They're going to continue to do well. So I'm definitely long Super Micro. And on that one, you see, I don't have the call on yet because it's so far down and taken such a big hit. I'm just long Super Micro, but I don't think it can drop too much further. SoFi, I've got a video that is coming out or just came out, depending on when I release this one. But I'm making this video today as well. But SoFi is, I'm totally long, bought in on SoFi, and this is one of my favorite plays right now. So look out for that video. Ulta, over here. It's another Buffett stock. I put this on last week. It's got high IV rank 33. I like it much higher than where it's at right now, but it has had a move up. So I did put on the Iron Condor in order to collect money on both sides, but I'm a little bit long. So you can see it's on the lower side at 404. So I'm profitable all the way up to 445. So all the way up here. And we've already had that move up. So there's quite a range that we could do. And we have the higher the IV rank, the bigger the range that you can have and the more premium that you can collect. So let me know what you guys want to see as far as videos on Iron Condors or credit spreads or whatever. And I'll look to make this a video covering it. The VIX, this is my protection, my hedge. Actually, it's moved up a little, but I don't normally buy options. When I do, they're longer term. This one's 233 days out. If you look at this, if the VIX spikes up, I mean, this is, how many do I have on? One or two? Yeah, I've got two contracts. But if we, if you look at the VIX and where it can spike up to, look at this back just earlier this year in August, it spiked up to 60, 60, 64, 65. That's crazy. Now, if you look here, if it spiked up to 65, then the market's dropping at the time, but I'm gonna I'm gonna close this out and sell it. So I bought these two options, but I can sell this for 88.90 P&L at expiration. So this would give me over $8,000 protection if it spikes up, and we can take that for profit on a much smaller investment. We bought these. The VIX 395 was the. What did I pay for the VIX? $455 per contract. So we spent $900 for $8,000 worth of protection if it spikes up to 60. If it spikes up to 30, what do we have? 1900. But still, that's double your money, even if it spikes up to 30. But this is my hedge, my protection, and that's how I like to protect some of the long. So this is a short position, buying the VIX. And then ExxonMobil, it's been trading in between a range. We're right in the middle of it. I've got two sets of iron condors on. Here's the put credit spreads. Here's the call credit spreads. We've done pretty well, I believe, in $180 in the last 30 days in ExxonMobil, and $800, $788 in the last year. But I like trading ExxonMobil. It's pretty consistent trading within a range. I like it between 120 and, I mean, anytime it gets down to 100, I'm going to be long. And anytime it gets up to 120, I'm going to look to be short. But we're kind of right in the middle right now. We're at 115 and IV rank is good. So that's when I sell these iron condors, and we've collected 127 on these, and we've got $488 left to collect. We've got one set in October and one in November, and right in the middle of the range. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Mumu. Get your free stocks. Leave a comment, ask a question. I answer every one. Let me know what you're trading and why. I'll see you in the next video. Thanks for watching.